So, this week, adding gold to your portfolio. We'll talk about gold's remarkable rally since the start of the year, as well as how you can start investing in this asset. As usual, not financial or legal advice. Now, gold's performance since January 2024 has been nothing short of impressive. It is up 15.48% and has even outperformed the S&P 500, the US stock market, which within a similar time frame only gained 8.35%. Yeah, I say only, actually for the S&P standard, it's already considered quite impressive. Now, if we zoom out and take a look at gold's 5-year historic gain, it is up 88.26%, yeah, representing an annualized return of 13.50%. And there are several reasons for gold's performance over here. One of the biggest reasons being, well, the conflict in the Middle East. In fact, the US president expects Iran to attack Israel sooner than later. And all of this rising geopolitical tensions, including the one in Ukraine, is expected to drive gold prices higher. Another factor is the US Federal Reserve's policies. There is optimism that the Federal Reserve will soon reduce interest rates. But the central bank wants to see more evidence that inflation is a tame beast. We're expecting interest rate cuts this year, but if the Federal Reserve continues its cautious approach, gold prices could risk a pullback. Now, if you do not understand any of this jargon over here, what's most important is that the world right now is looking at the Federal Reserve when they are going to start to reduce interest rates. Yeah, and one of the biggest factors that the Federal Reserve is looking at is US inflation. Yeah, US inflation recently, since June last year, has been stubbornly hovering around the 3.2 to 3.7% range. And this range itself, right, is actually significantly higher compared to the Federal Reserve's target goal of 2%. Yeah, so if gold were to continue its rally, one of the big drivers is the Federal Reserve reducing interest rates earlier this year or hopefully within this year. Now, talking about global central bank, right? China has been aggressively buying gold for the 17th consecutive month. Yeah, they've acquired about 72.74 million ounces worth about $171 billion. And the reason for this, right, is the process of de-dollarization or reducing their reliance on the US dollar. And if we extrapolate China's movements into gold, and then layer gold prices on top of it, the evidence becomes quite clear. China is one of the biggest factors in the recent gold prices because they are heavily stockpiling this asset. How can I get exposure in this asset? Well, there are several options. First one being buying gold ETFs, specifically exchange traded funds that track gold prices. Now you can buy any of these ETFs just like how you buy a regular stock. All you need to do is open up your Rakuten, your Mumu, or perhaps M Plus Global. As long as the broker supports international ETFs or ETFs itself, you're most likely able to find these ETFs. You search up their tickers GLD for SPDR Gold Shares, IAU for iShares Gold Trust, and Gold ETF for the Trade Plus Shara Gold Tracker. So if you're not a Muslim and you're not too particular about Sharia compliance, right, at the end of the day, what you got to mainly look at is the fund size and the annual fees. And this list itself is not exhaustive. There are still so many gold ETFs out there. All you need to do is do a simple Google search. Now the next one is Bursa Gold Dinar. I'm sure some of you have heard of it before. It is a relatively new app developed by Bursa Malaysia, and it's right now you can download it on the App Store, allowing you to own gold from as little as 10 ringgit. So this platform is Sharia compliant, regulated by the Securities Commission, and right now it is the most economical option because they are waiving the majority of their fees. There is no purchase fee, there is no sales fee, there is no transfer fee, there is no annual admin fee, at least until June 2024. Okay, so right now the green box that you see over here is their current fees. There is a top-up fee of 0.35% of the transaction value up to a maximum of 1 ringgit. So if you decided to top up 10,000 ringgit, they only charge you 1 ringgit. And then there is a withdrawal fee of 15 cents. To start investing, download the Bursa Gold Dinar app, complete the registration process, deposit your money, and you'll be able to get exposure to gold. And the third option itself, this one is Versa Gold. Personally, it's one of my most preferred options because I am a regular user of Versa. For those of you guys who have not yet heard of Versa, it is a digital cash app that allows you to invest and grow your savings. A fun fact, Versa Gold's underlying fund is the Trade Plus Sharia Gold Tracker. Yeah, this fund itself is local, which is why the fund size is significantly smaller compared to global funds. But when you are investing in Bursa Gold itself, just know that you are putting your money into this particular fund over here. Okay, so Sharia compliant, backed by physical gold. There is also quite a bit of management fee, up to 0.33% annually, and the minimum investment starts at 100 ringgit. Now, why I really like investing with Versa Gold is because if you're a regular user of Versa, you can choose to switch your funds anytime. Now, let's say you currently have some holdings in Versa Cash and you decide to increase your exposure in gold. You just tap on at the home page, you just tap on the manage button and you'll be able to switch your funds from Versa Cash over to Versa Gold or any other funds supported within the app. And all of the options that I mentioned just now is they allow you to own gold digitally. Yeah, with the biggest con being, well, you don't actually own the asset because you can't actually see it. It's managed by a third party, but there's a lot of pros. It's easy to invest, it's extremely low fees, right? I showed you the comparisons just now. Minimal capital, sometimes you can start from as low as 10 ringgit, and there is no management required. Yeah, if you want to buy physical gold, then you got to think about where you want to store it, how you want to store it. And let's talk about physical gold straight away. So let's say if you're those person who wants to own an asset and see an asset physically. Well, this has its own pros lah. Well, first of the pro being you own the asset and it sort of feels quite shock, right? You touch the gold bar and then feel it between your hands, you feel quite rich. But then there's quite a bit of cons which you have to consider. Yeah, where do you want to store it? That's the first thing. And what happens when people around you they start hearing that you own a few gold bars? And nowadays, robberies are very unlikely, but they can still happen. Touch wood. Then what about buying or selling loss? What about capital and craftsmanship? Yeah, if you were to invest in gold jewelry, a large portion of your expenses will go towards paying the designer or the jeweler, yeah, for the craftsmanship costs. And at the end of the day, when you want to sell it back, there is a bit of loss over there also. So what about gold bars? Well, when buying physical gold bars itself, most of these merchants they tend to charge a higher premium. And when you want to sell it back to them, generally they don't take the market price and they take much lower compared to the market price. And then there is a bit of loss over there as well. And at the end of the day, if you want to acquire this 1 ounce of gold bar over here, well, 1 ounce of gold bar right now costs about, let's see, 2,400 US dollars if you round it up. Yeah, so there's also an issue of capital. You have to pay about 10K upfront just to get this amount of gold. Okay, so at the end of the day, it entirely depends on what you want and what you're looking for. Make sure you consider the pros and cons carefully before you start investing in this particular asset. How many percent of gold should I allocate within my portfolio? Well, not more than 5 to 10%. This one is according to experts and a lot of the articles as well as blogs that I read online. Yeah, the optimum figure is about 5 to 10%. Well, why is this the case? Gold is generally only used as a hedge against inflation, number one, and also a means of diversification. Yeah, diversification being that you want your portfolio to be invested in assets that are lowly correlated or negatively correlated to one another. Yeah, in the event that the one asset underperforms, at least you have another asset to sort of like be an anchor within your portfolio. So higher percentage, well, obviously it brings higher risk and volatility to your portfolio as well, because gold itself is quite a volatile asset. You take a look at its 5-year performance, even though it's up 88%, it's not a gradual path upwards. Yeah, there's ups and downs, and at the end of the day, if your portfolio comprises of like 20, 30, or even 50% gold, well, then how are you going to sleep at night? You're definitely going to take a look at gold prices every day and wondering whether it's too early to take profits, or perhaps if I don't take profit right now, it's too late. Yeah, if you have this sort of dilemma when investing, that means you are overexposed in the asset, and it's probably time to reduce it down to a percentage that you're comfortable with, or according to general recommendations for gold at least, not more than 5 to 10%. But the last factor, being the biggest one, is that this asset itself does not generate income. Yeah, it's different compared to investing in Maybank or perhaps Apple shares, right? Maybank and Apple itself, they are companies that are constantly evolving. Yeah, they will constantly generate income for their shareholders, very often paying out juicy dividends. Yeah, Maybank 6 to 7% every year. Apple shares, well, their share prices appreciate by 8 to 12% per year as well, right? Gold itself, the only way to make a profit is to buy low and sell high. Let's say your target is 5% of your portfolio and you can accept a 3 to 4% deviation. Yeah, meaning that if gold drops to 2%, yeah, gold underperforms and it drops to 2%, it's actually a signal for you to increase your exposure in this asset. Right? Conversely, if gold performs, yeah, continues to rally, then its weightage within your portfolio will increase, let's say about 8 to 8% of your portfolio, and your accepted deviation is about 3%, then that's a signal for you to take profits, reduce your exposure back down to your target of 5%. And notice when I talk about this strategy itself, right, never did I talk about gold prices, and never did I speculate whether gold prices will go up or go down. It entirely depends on what your portfolio requires. What is your take on physical banks gold investment account? Okay, so this one I didn't talk about, which is the option that I would say I totally forgot. I saw a lot of banks out there, they're allowing you to invest in gold as well. One thing you got to take note of is the spread. Okay, you can actually compare the spread with Bursa Gold Dinar. Yeah, over here they have the price, right? Live price. And then if you click inside even more, I don't know where it is, but just make sure you check the buying and selling price. Yeah, if Bursa Gold Dinar's spread is much better compared to Maybank, then obviously investing in this option itself is much more worth it, compared to buying gold from banks. Yeah, generally, buying gold from banks, well, we all know banks are a bit stingy and their fees tend to be quite high. Yeah, so off the bat, I'm going to say Bursa Gold Dinar is probably the more economical one. Especially right now, they are waiving the majority of their fees. With the China's property bubble burst recently, would you think gold will rise further, given its perception and importance by the Chinese community? Yeah, I personally think this year gold will continue to go up in price. Well, it's a bit too early to say, but according to this article by ING, and ING is a reputable research firm, they believe that gold is likely to continue going up in price because, well, first of all, there's geopolitical tensions over here. Then next, there is also China suddenly aggressively buying up gold. I talked about it just now. Since Q4 last year, you take a look at their gold holdings. Central banks around the world right now, they are heavily acquiring gold because of the dollarization. They're trying to reduce their reliance on the dollar, which is why this asset is expected to go up in price. And that brings me to the end of my session tonight. Hopefully you guys learned something. Shout out to all our Gather members. Thank you all so much for your support. Andrew, Wendy, Edward, Alex, CC, Is, Urshad, Caveman, Balls, Kelvin, Tommy, Jinkang, Adrian, Jazz, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, Lukman, Jack, YC, Arif, Hazik, as well as all of our learner members. And we'll be back next Sunday, 10 p.m. Alright, guys. Good night. Stay safe.